Hey guys, this is actually my second time trying to get this thing to work, so hopefully this time it'll work. I took some notes here on our next topic of internal controls, cash controls, and that is bank reconciliation. Some of you may know what that is with your personal account, but basically bank reconciliation means ensuring that the business's cash records equal the bank records for the company cash. You want to make sure that what you think you have is what the bank says you have. One of the key components that you need in order to do a bank reconciliation is the bank statement. Bank statement is simply a report showing all the withdrawals and deposits from your account that have cleared the bank. You may have written some checks, made some withdrawals, deposited some money that you'll have in your records, but they don't show up in the bank's records. We'll talk about what that means in just a second. On page 408, turn to page 408, there's some important terms here that we need to talk about. And the first term is what's called a credit memo. Basically what a credit memo is, it's notifying a business that money's been deposited into the company's account. The bank has deposited in the company's account. The company, however, has not recorded it yet in their records. So the credit memo tells the company that the bank has deposited money into its account. Therefore, it increases the company's cash balance. I know it seems a little opposite when you say credit, because credit means take away from an asset, but when you think about it in bank's perspective, when they have our money, they owe it to us, so it's actually their liability. So when that increases, we deposit money, it's a credit to the banks. The other term is debit memo. And debit memo is a note notifying business that money has been withdrawn from a company's account, therefore decreasing the company's cash balance. Again, a debit memo will show up on the bank statement, but we have not yet recorded it in the company's records. If you turn and look on page 408 again, you'll notice that in the middle of the page, actually at the top, there's a nice chart that shows the differences between a bank and a company, and the credit memo and debit memo. And right underneath that chart, it lists 5 types of credit memos and 4 types of debit memos. Make sure that you read those, you understand those, and actually memorize them, because that will help you with the bank reconciliation process. On the bottom of page 408, it also talks about the abbreviations and what those abbreviations mean on the bank statements. So take a look at those just so you're familiar with those. Alright, we're going to get on with the bank reconciliation, so turn to page 411. On page 411, at the top, it shows how to go through bank reconciliation. And I have basically just retyped the steps that are on page 411 at the top. The key part of bank reconciliation are steps 4 and 8. Steps 4 and 8 get an adjusted balance from the bank statement and an adjusted balance from the company's records. Those adjusted balances must equal. So step 9 is key. Verify the bank balance equals the company balance. In other words, step 4 must equal step 8. If that does not happen, then you made a mistake and you need to find the mistake. So that needs to be true. Alright. As you look at the bank reconciliation for the bank section, you get the cash balance according to the bank, which is the ending bank balance on the bank statement. You had any deposits not recorded by the bank. These would be deposits that the company's made but don't show up on the bank statement. You then need to deduct any outstanding withdrawals. Your book says outstanding checks. I say withdrawals because you could have some kind of electronic withdrawals. So checks or electronic types of transfers. basically withdrawals that a company has made but the bank hasn't yet paid, therefore they don't show up on the bank statement, but they do show up in the company's records. Then you get your adjusted bank balance. Section 2 for the company section. First thing you need to do for the company section is you need to get the cash balance for the company. This is going to be found in the general ledger cash account. Make sure you take the ending balance in the general ledger cash account. You then need to add any credit memos that have been added or recorded in the company's records by the bank. Because the bank has done this, again, credit memos already show up on the bank statement, but they will not show up in the company's records. Step 7, you need to deduct any debit memos that have not been recorded in the company's records. Again, those will show up on the bank statement, but not in the company records. That then will give you an adjusted company balance. Again, step 4 must equal step 8. Imperative that that's true. If it's not true, you need to find your error and mistake. Alright, we're going to go on to practice exercise, so turn to page 423. Okay. We're going to do exercise 8-3A. And what we're going to do is we're going to do both sections of the reconciliation. So first we have bank section, and then we're going to have companies section. If you want, look back at your notes on how to do this. So in the bank section, the first thing we need to get is the ending bank statement balance. In practice exercise 8-3A, it says balance per bank. That's the ending bank statement balance. So balance per bank is $12,175. Okay. The second step then says, and I'll look back, second step then says add deposits not recorded by the bank. Company made a deposit but doesn't show up on the bank statement. These are basically going to be what are called deposits in transfer. Would also be considered outstanding deposits. Bear with me while I get that set up. Hopefully you're going to get this done in 15 minutes because that's all I have with this recording. Okay, so any deposits in transit, we have one which is $1,800. Okay. That will give us a subtotal. So if we add those, we get $13,975. Now, the next thing is we have to subtract any debit memos. No, sorry. I didn't mean to say that. If we look back at our notes, we need to subtract any withdrawals, any withdrawals that are outstanding, checks or electronic types of transfers, withdrawals that a company's made but the bank hasn't yet paid. Okay, so that's what we have to do. So when we look at practice exercise 8-3. Bank service charge, that's something the bank's already done. Deposit in transit, we already have. An NSF check. An NSF check means that somebody wrote a check and didn't have enough money in it. When we received that check, we automatically deposited it, assumed that it was good. We now are getting back from the bank saying it's not good. So we need to take that out. But that comes out of the company section. So that's not part of the bank section because the bank will take out NSF checks automatically. That leaves us with outstanding checks. Outstanding checks are checks that the company has written but the bank hasn't paid, so we need to subtract those. So we subtract that amount, which is $57.95. We get the border here. We subtract those two. And you get a balance of $81.80. Let's move to the company section. Company section, balance per company records is $94.80. Okay, now, first thing we need to do the company's balance is we need to add credit memos. Okay, so it'll show up on the bank statement and on the company records. So add anything that the bank's added for us. If we look at that, their bank service charge is something that we need to subtract. We need to subtract the NSF check, so that's nothing. So we really don't have to add anything on this. Okay, now I will just put here, just so we can see it, there are no credit memos in this case. So there's nothing for us to add. There we go. Okay, we have to get our subtotal. Then we have to subtract. Running out of time, people. Running out of time. Our debit memos. Okay, debit memos would be bank service charge, $50. We have to subtract $50 there, and then we also have to subtract the NSF check because we deposit, but it's not there. Okay, we get an adjusted bank balance. So we have $94.80 minus 50 minus 1,250. That gives us $81.80. Again, B9 must equal D10. And that is how you do a bank reconciliation. I know that's quick. I hope you can get it. Read through the chapter. Read through pages 407. 407 through 412. Look at the examples. Hopefully you can get it. Check Classroom for your assignment. Hope things go well. Send me an email if you have questions on it. Otherwise, have a great day.